Welcome back. The picture across Asia is mixed, as we've been telling you, but it's more up than down. One would have to say the Hang Seng is the only market that's slightly lower, which is why the overall pre-open indication for us, that's the market that's actually down. The overall pre-open indication is that we could still be starting off positive. There we go, 66 points on the higher side as far as the implied open is concerned. Now let's talk about stocks. Plenty of them as always. So let's straight away get to the CNBC-TV18 list of top stocks to watch. And guys, morning to all of you. Happy Monday to all of you. Nigel? JSW Steel, how does the performance look?
Well, the numbers were in line and the performance will improve from here on. And so that's why I'm going with green. The numbers should come up for you on the screen, what they've reported on a consolidated basis. That compares with our poll, more or less in line out there. The EBITDA number, well, that improved on a standalone basis as much as expected, came in at around 8,800 rupees per ton, which was our expectations. Focusing a little bit more on the standalone business, because that's where the majority of their value does come in from there. The volumes have improved out there, clock close to around 5.77 million tons, so a bit of operating leverage has played out. Lower cost as well would have benefited them and some kind of higher realizations. And that's why, in fact, you have the EBITDA number that's improved by around 900 rupees on a sequential basis. So a thumbs up out there. In terms of the overseas business, well, in the US business, the plates and the mill business, it reported a positive EBITDA number, while you have the OI operations where the losses did come down by half. So the US business continued to report a mild net loss, though the losses have come down drastically on a sequential basis. So you like that. However, the Italian business, there was the order that got a little bit delayed, and that's why that reported a little bit of a weakish performance. What's good as well is because of their release some working capital, they've generated a good amount of cash. The debt number has come down to around 77,000 crores, which is a reduction on a sequential basis by around 3,000 crores. On the BPSL asset, they believe that they have strong grounds for availing all legal remedies. So we'll have to wait by to see how that pans out. But going by the numbers and an improved performance coming up in the coming quarter, I'm going with green on that one. In fact, we'll be connecting with the management of JSW Steel later on in the show at around 9:40 a.m. Well, let's go across to Vivek now to tell us about how NTPC's numbers were. Vivek?
Well, good morning. NTPC now slightly subdued set as far as Q4 FY25 is concerned. Now, numbers are restated on a year-on-year basis, but consolidated as well as standalone, so a slight miss to the consensus expectations and even to our own poll. But looking at the revenues, largely higher by 4.5% on a year-on-year basis. EBITDA up 4%. Margins coming in quite steady at 29.6%. Profitability up by 24%, largely aided by the strong performance of both the subsidiaries as well as the joint ventures of the company, and this is something that aided the bottom line. Now, talking about the key takeaways from the conference call that the management held over the weekend. Number one, the company has missed the target for commissioning. The company had targeted close to 7 gigawatt of commissioning in FY25, but in line with most of thermal as well as renewable energy peers, the company managed to commission only around 2 gigawatts worth of capacity. Now, however, the company in the call has given a very strong guidance for capacity addition for both FY26 as well as FY27. 11.9 gigawatt of commissioning targeted in FY26. This includes the spillover from FY25 and 9.9, almost 10 gigawatt of capacity addition in FY27. So that is something that should aid. Overall a miss, so expect some red, but the guidance that the company is given should aid the stock performance here on.
All right, Vivek, thank you very much for that. Well, let's talk about Glenmark Pharma, which have been focused on the back of numbers as well. Ekta is here with details. Ekta, morning.
Morning. Well, definitely a miss in terms of Glenmark's numbers this quarter. 3,256 crores is what they've reported in terms of revenue. Margin 17.2%. Street was anticipating close to 19% in terms of margins. And the adjusted profit came above estimates. But if you look at the geographies, that was weak. India was flat on a year-on-year basis. US in terms of dollar terms was down to around $82.4 million versus $91 million year-on-year. Europe did well. It was the only shining star really. It was up 20%. But overall, the companies also missed the FY25 guidance. FY25 revenue guidance was 13.5 to 14,000 crores. They've come in at around 13,300 odd crores. And EBITDA margin guidance of 19%. They've reported 17.6% on an FY25 basis. Their call is at 8:30 a.m. More details there.
Okay, so Glenmark Pharma is going to be in focus as well. Back to Nigel then. Nigel, JK Cement. How does it
JK Cement's numbers were good, actually. They beat Jefferies' estimates by close to around 9%, and they beat, most brokerages in terms of, what they were expecting. So on the top line, good growth of close to around 15%. And guess what? The sales volumes numbers actually have come in by close to 16%. That itself is very, very positive. The operating profit as well jumped up by close to around 37%, which is telling you that there was a good amount of margin expansion, which should come up for you on the screen. On a sequential basis as well as on a year-on-year basis, it's up to around 21%, which is very, very encouraging. They've got some benefit because of power and fuel costs coming down by close to around 8%. And the PAT number as well has moved up because the finance cost has been more or less subdued. Now, what stands out is the grey volumes, as I said, grey cement volumes, that's up by close to 16%, which means they've outgrown what the industry has done. They've gained market share as well. And remember, all of this is organic growth. So that gets a thumbs up. The grey cement realizations were up by close to 3% on a quarter-on-quarter basis. That means they're doing something right with regard to the mix. And the standalone EBITDA per ton has clocked 1,265 rupees per ton, which is very, very encouraging. So going with green out here, and for JK Cement, what's good is in the last year, they've been in capex mode, yet the debt number hasn't ballooned up. And also on the EBITDA front, they've reported a more or less flattish number on an EBITDA front for FY25. That's much better than all of their peers. So going with green on JK Cement. But back to Ekta to tell us about Narayana Health. Ekta?
Well, good numbers for Narayana. The revenue was up around 18.4% on a year-on-year basis, 10.6% Q-on-Q and Q4. Margins improved to 26.1% versus 25.3% on a year-on-year basis. And the profit growth was around 3%. India was up around 11% year-on-year. India margins also improved for the company this quarter. The Cayman revenue was up around 50% on a year-on-year basis to 379.7 crores. They have expanded operations there and it's finally showing in terms of the P&L. So good going for Narayana.
Okay, all right. And we will, by the way, hear from the management in just a bit from now on the performance and, of course, the outlook going forward. GE, Vernova and Jyoti CNC are the next two we want to focus on. Vamakshi is here with details. Vamakshi, morning.
Good morning, Prashant. Let me first start off with GE Vernova. The company reported a largely good set of numbers on the operational front. When you look at the revenue, that saw an uptick of almost 26%. This is slightly lower than what the street was expecting, mainly on account of the growth that we saw in the exports. The gross profit margin for the company improved by 912 basis points. The EBITDA margin came in at 21.9%, the highest seen among HV transformer peers. The net profit too saw a very strong uptick of almost 181% on a year-on-year basis. In fact, the management said that the endeavor is for the company to sustain the gross margins at this level or improve it further. The best is yet to come. As far as ordering activity is concerned, order inflow saw an uptick of almost 125% on a year-on-year basis, coming in at 2,990 odd crores, and the order book also stood quite strong at 12,660 crores. So given the kind of numbers that the company has given, good growth in ordering activity, going with the green for GE Vernova. The next counter I'm focusing on is Jyoti CNC. Good numbers out here as well. Revenue saw an uptick of almost 28%. The EBITDA margin too has improved substantially to 30.9%. This is the highest that we've seen in the last couple of quarters. But the net profit actually saw an uptick of only 9%, and that is because the effective tax rate was much higher as compared to the same quarter last year. Ordering activity, the order intake was rather weak, minus 17%. Order book, although saw a good uptick of almost 26%, but given the kind of numbers the company has posted, going with the green for this counter.
Okay, all right. So two green stocks coming in from Vamakshi over there. Thanks for that. Back to Ekta then. She is very busy this morning. Ekta, Divi is in news as well. What's happening?
Well, they've signed their third long-term supply agreement, so that's a positive. They've signed their long-term manufacturing and supply agreement, which is with a global pharma company to manufacture and supply advanced intermediates. The company said that they're expecting meaningful revenue contribution from this agreement. They're not permitted to disclose the name, but nonetheless, there will be some amount of capex which will be funded by the company itself, by the global manufacturer who they've tied up with. So overall, definitely positive news considering it's the third long-term agreement signed by the company. But remember that the stock is very expensive, trading at around 67 times FY26, 56 times FY27. So maybe that could, maybe cap a little bit of enthusiasm, but nonetheless, positive news.
Okay, all right. Got that, Ekta. Thank you very much. On to Vivek then. Eternal could be news because of certain index changes and flows. And AFCONS, I think, is on numbers again. Weak numbers there. Vivek, morning.
Well, good morning. Absolutely right. So first, let's focus on Eternal, or earlier known as Zomato. So in line with what we had anticipated, given the fact that the company had gone ahead and restricted the foreign ownership limit to 49.5%. Both the passive index managers, both FTSE as well as MSCI, have gone ahead and announced weight reduction in the indices for Eternal. So now this particular weight reduction for FTSE will happen on May 27th and is expected to lead to outflows of close to $380 million. The MSCI weight reduction is expected to happen on May 30th, and that is expected to lead to outflows of close to $460 million. Remember, the flow estimates are as per IIFL Capital, but given this particular overhang of passive selling pressure, expect a red on the stock, at least at the open, as far as Eternal is concerned. Now, coming to AFCONS Infra, like you mentioned, muted said, first up, if you're looking at the guidance, the company had guided for a flat to marginal growth on the top line. However, for FY25, the company has seen a degrowth of close to 4.5%. But looking at the Q4 numbers themselves, very muted. Revenues lower by close to 11.5%. EBITDA down by almost 17.3%. Margins too compressing almost 60 basis points, and profitability down by 23%. The one solace is the fact that the order book remains quite strong at a little over 36,870 crore, and the order inflow as far as L1 position for the company is too quite steady at over 10,650 crore. Company says that they expect to deliver confident, sustained top-line growth while maintaining a sturdy margin profile. In fact, in an earlier call, the company had expected 20 to 25% top-line growth for FY26, but at this point of time appears to be a steep ask.
All right, Vivek, thank you very much for that. So lots and lots of stocks on the back of numbers to watch out for. Well, just quickly recapping our list of stocks here. So stocks with positive news flow are JSW Steel, JK Cement, Narayana Health, GE Vernova, Jyoti CNC, and Divi's Laboratories. Well, stocks with negative news flow are NTPC, Glenmark Pharma, Eternal, and AFCONS Infra. All right, well, let's just quickly tell you the most important news flow around commodities as well. Manisha is here as always. Manisha, morning.
Morning, Prashant. Thank you for that. Well, a couple of things which seem to be supporting or a risk on in case of commodities. One is Trump announcing a delay of 50% tariffs on European Union. And the second is the US dollar index coming off its highs and dropping below 99 right now. That seems to have supported the crude oil prices to gain for a second straight day, where it also has to do with the rising geopolitical risks in Middle East. Israel military says that they are planning to capture 75% of Gaza Strip in next 2 months. So these kind of statements clearly has had a premium building up in case of crude oil prices. But the decline in dollar and the China stimulus measures has been supportive for metals. So right now, copper is trading 0.5% on the higher side, and the support also comes in for aluminum and steel prices. The precious metals also have gained. Remember, we saw gold prices gain up 2% on Friday. Gold gained up by 5% in the previous week, and this was the best week in 6 weeks that the gold has put out. So, well, yet again, the tariff concerns, U.S. statements on Apple, Harvard, concerns on high U.S. government debt, sell down in treasuries, and of course, China importing gold at 11-month highs for the month of April has been supportive as well. So even as the U.S. markets are shut today, it's a long weekend there, we are looking at Asian markets starting quite strong when it comes to many of these commodities.
Okay, all right. Thanks a lot for that, Manisha. For the time being, we slip into a short break. On the other side, we have the management of Narayana Health that's going to be detailing their Q4 earnings. Stay with us.